Hi friends. So yes, what we are going to discuss today is the GST impact on cryptocurrency. Yes, it's a very hot topic. So there is a lot of conversations going on around this cryptocurrency, NFTs, all those digital areas where even recently the DGGI has conducted a search exercise on one of the leading crypto exchanges in India, and almost close to 70 to 80 crores has been collected as tax evasion by the exchange. So of course it might be because of lack of understanding of the law. Things are creating, it's been remaining a gray area, although it has been widely used by many users. Still there is a lack of clarity from the taxation perspective. So the governments are trying it. Governments are um, facing difficulties in catching up with this technology and bringing in appropriate regulatory measures, right? So whether the existing GST or the existing regulations itself equipped to handle such technological advancements, or we need more dedicated authorities to handle these things, they are all the things that the government is working on, especially in India. So RBI originally wanted to ban cryptocurrencies in India, private cryptocurrencies. Now we have moved into removing it from the status of illegality. Of that is, after taking removing the ban, it is now being looked to regulate these cryptocurrencies, and even India is planning to launch its own digital currency. So these are the backgrounds in which we are going to discuss this topic of cryptocurrencies GST impact, especially, and how a particular cryptocurrency transaction operates, who are the participants in the ecosystem, what income do each participant earn in the process, and what could be their potential GST obligations. Of course, the government has not yet come with any clarity or direction, so the video is purely from a uh, discussion and deliberation perspective, and there has not been any clear direction on this is how you have to treat it. So with this background, let's understand how the cryptocurrency environment works. So today, as we all know, the Bitcoin is a peer-to-peer money network, right? And it is run by supporters virtually in every country around the world. So now, if you look at a traditional banking system, right? So we work, or the current traditional banking system is centralized. That is, every party, in order to make a transaction, the banks acts as a middleman, right? And if you want to send money to, from A has to send money to B, the A approaches the bank and bank credits B's account. So this middleman role that is done by banks would no longer be required, because virtual currencies is going to have a decentralized system, whereby it is going to be run by peer-to-peer network, right? And hence this with an underlying technology called blockchain. So blockchain is a very good technology where things are under distributed ledger mechanism. So there is no one single point where the data is stored, and it is spread over the distributed network. So the governments have recognized this blockchain technology as a revolutioning technology, and even the Goa GST is trying to make GST itself as a use case to adopt blockchain, so that any transaction that goes into the blockchain cannot be tampered or altered later. So that kind of a strong ecosystem can be developed with blockchain as a technology. So all these virtual currencies are developed using this blockchain technology. Now, let us look at these from the GST perspective. I'm not going too technical into what is blockchain, how a virtual currency is attached to a blockchain, and yes, that's the underlying technology as we all know. Now, let us look at it more from a GST point of view, and then we'll apply it on a transaction as well, right? So now, is Bitcoin a money under GST? So section 275 of the GST Act defines money to mean Indian legal tender or any foreign currency check, promissory note, bill of exchange, letter of credit, draft, pay order, traveler check, money order, postal or electronic remittance, or any other instrument recognized by the Reserve Bank of India when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination, but shall not include any currency that is held for its numismatic value. So as we can see from the definition, in order to qualify as money for GST purposes, that should be recognized as a legal tender by RBI, which is the very fundamental condition to consider something as money under GST. Yes, although we might call virtual currency as currency, per se that's not a money under GST. And why is this important? This is very much important because GST can be applicable only on goods or services, right? And the goods definition under GST excludes money. So if something is classified as money, then GST is not applicable on the transfer of such commodity. So now we understand Bitcoin is not a money because it is not recognized by the RBI. In such case, is virtual currency goods, right? So not restricting it to Bitcoin, but all virtual currencies, right? So is virtual currency goods? Now CGST Act defines goods to mean every kind of movable property other than money and securities, but includes actionable claims, growing crops, etc. So now, as we saw, goods excludes money and securities. So we clearly saw Bitcoin is not money. Is it a security? The answer is no, because SEBI securities are something which are recognized by the Security Control Regulation Act, and that doesn't consider Bitcoin as a security. Hence, if Bitcoins is having the property of a movable property, then it can be considered as goods. So now what is a movable property? Section 3 subsection 36 of General Clauses Act defines movable property as the property of every description except immovable property, right? So immovable property, as we all know, includes lands, buildings and things attached to earth, right? So now if something qualifies as a movable property, then it is goods under GST. So now natural questions arises: can bitcoins be considered as movable property? So now now the very landmark judgment, the Tata Consultancy Services versus State of Andhra Pradesh, where it was observed that goods may be a tangible property or an intangible property, and the Indian law does not make any distinction between tangible property and intangible property. So something to qualify as goods, there were three conditions that were spelled out by the ruling. That is, if they have the attributes with regard to its utility, right? Of course bitcoins are having utility. As we know, there are companies which are accepting it as a form of payment. They are exchanging it among themselves. Yes, there is some amount of utility. Is it capable of being bought and sold? Yes, there is a market going on, exchange, where people are buying and selling those currencies. And is it capable of transmitted, transferred, delivered, stored and possessed? Yes, all the cryptocurrencies can be stored in a wallet. It can be transferred from one crypto wallet to another crypto wallet. And hence, if we go by the thumb rule spelt in TCS services, it looks like bitcoins can be looked at as goods under GST, right? However, this is only a mere uh, deliberation or discussion on how bitcoins can be classified under GST. As mentioned, nothing has been clarified by law. But however, this gives us guidance to say that yes, maybe bitcoins or cryptocurrencies can be considered as goods for GST purposes. Is virtual currency a security? As we discussed, it does not fall under the SCRA definition, and hence they can't qualify as security. Is it an actionable claim? It's a very interesting question, because again, if it's an actionable claim, it is excluded from the GST ambit, right? Goods definition excludes an actionable claim as well. Now, actionable claim means a claim to any debt other than a debt secured by mortgage of immovable property, or by hypothecation or pledge of movable property, or to any beneficial interest in movable property, not in the possession, either actual or constructive, of the claimant, which civil court recognized affording grounds for relief, whether such debt or beneficial interest be existent, accruing, conditional, or contingent. So it's an interesting point to see whether it qualifies as an actionable claim. But personally, I feel for a Bitcoin, there is no it can't be looked at as there is a debt for which you have a claim. Of course, it has a value, but that doesn't mean you have a claim to any debt. Nobody owes any to the holder of Bitcoin any particular value. Tomorrow, the value can still shut to zero. So personally, I don't feel Bitcoins would fall under the definition of actionable claims. Now, is a virtual currency a service under GST? CGST Act defines service to mean anything other than goods, money, and securities. So, if at all the TCS thumb rule fails and we say no, this is not goods under GST, then very well it can be considered as a service under GST, right? So, uh, having looked at these are the possible ways in which we can consider cryptocurrency classification in the GST regime. So as I said, it is more likely it can be classified as goods under GST. But however, even if classifying it as goods under GST will have its own problems. Like let's say, what chapter heading are we going to classify it under? And if it is goods under GST, then importing it, we might have to go for the levy under the Customs Act, that is import. And customs does not have machinery to tax transactions which are digital, right? Unless you cross the territorial waters and come to India, Customs Act cannot tax such transactions. So if you say it is goods, then we don't have adequate machineries to tax it. If you say it is services, then still again there are difficulties in handling services as well, which we will see. But this is where we stand today on classifying cryptocurrencies under GST. But having said that, and looking at how some other jurisdictions are looking at cryptocurrencies, even I personally feel that it is better we recognize supplies of cryptocurrencies as exempt transactions or transactions which are outside GST, and keep these supplies as exempted in nature and not consider it as, even if goods, we'll keep it as exempted goods. So that's one way to approach, instead of looking at it as a supply. Even though it is not money, we should still exempt this, because even if tomorrow the Indian government is going to come up with its own virtual currency, which is recognized by RBA, right? And then that will take the character of money. But however, private cryptocurrencies will not be equated to money. So then you can't have a level playing field when one is outside GST ambit and one is within the GST ambit. So to keep all the discussions and these kinds of inequalities to rest, it is better if these cryptocurrencies are kept outside the GST ambit as exempt supplies. So this again is only a personal suggestion, and how the CBIC is going to come up with clarifications is something we have to wait and watch. Now let us look at a practical example. As I said, we can understand who are the participants in the cryptocurrency ecosystem and how a transaction happens and what incomes are earned by each party in the transaction, right? So it is not just the cryptocurrency, guys, that can be goods or services, but that's something we discussed. But there are also other parties like crypto exchanges. As I said, the DGGI has just taken 70 crores as tax evasion from one of the leading crypto exchanges. So there are still parties in the ecosystem who are liable to GST. So now let's look at an example. If Mr. A wants to buy X number of bitcoins from the crypto exchange, right? So then Mr. A goes to the crypto exchange and he wants to buy the bitcoins. Now what happens? The crypto exchange takes the money from bank account of Mr. A and credits bank account of Mr. B, who's a potential seller also on the exchange, who wants to sell bitcoins, right? So now money would be transferred from bank account of Mr. A to bank account of Mr. B. So now once money is received by bank account of Mr. B, what will happen? Mr. B is expected to transfer the bitcoins in his crypto wallet to Mr. A's crypto wallet. So now these are also separate service providers. Some crypto exchange offer their own wallets where you can store your bitcoins. There are also independent service providers who just offer the crypto wallet services. So where you would like to create your wallet based on the security features, etc., a user can have his crypto wallets. So now once the money is received by Mr. B transfers bitcoins from his wallet to A's wallet. No, this is not the end of the scenario, because this is a secondary market. That is where the transactions are happening over exchange. But what happens at the back end, my friends? Back end, what's happening? There are people called miners. So I've tried to summarize the ecosystem in this slide, where there are parties called miners, and in the middle, as you can see, that's called a block. So the transaction, that is Mr. A or Mr. B is sending X number of bitcoins to Mr. A, is a transaction that will be bundled into a block. And now this block, many will have such transactions which would be validated by parties in the system called miners. So who are these miners? These are miners with some high computer applications who have the potential to validate these transactions, right? So how would they validate? They will ensure that Mr. B has the required amount of coins to send to Mr. A, and then they also do cryptography validations using an algorithm called SHA-256. So these kind of cryptography solving would be done by the miners. And basically from a Bitcoin perspective, it is a competition, guys. That is, all the miners would try to compete with each other, and then they will try to solve the cryptographically the transaction to validate this block. Now only one miner who is first in succeeding in solving this mathematical algorithm, uh, he is considered as the winner, we can say. So now once he solves the problem or solves the arithmetical puzzle, then he would pass on his answer or his validation to all the other miners in the system, and minimum two-thirds of the miners have to validate the solution or identified by this miner. And once they all agree that to the transaction, then the block will be considered as a valid block, and it will be attached to the blockchain. Now as we said, once this gets attached to the blockchain, it is permanent, guys. It can never be altered. What that is, the if you go and see the ledger, it will say that this much of bitcoins has been sent from this bitcoin address to this bitcoin address, that is from Mr. B to Mr. A. So this transaction can never be altered, and it goes into the blockchain. But before going into the blockchain, it has been mined by the miners or validated by the miners, and then only the block is attached to the blockchain. Now as we saw, only the first miner who gets to solve this arithmetical problem or this cryptography problem would be earning something called a Bitcoin reward that is automatically given by the software. So now this is where new Bitcoins are created, my friends. That is, if a miner validates a transaction, to incentivize the miner, there are what happens is the system itself, that is the Bitcoin blockchain itself, gives 6.25 bitcoins. Currently that is the reward that is given for each miner. So this 6.25 after 4 years will become half of it, say 3.125. So like this, every 4 years there is a halving happening in the Bitcoin blockchain. Currently there is a 6.25 new bitcoins that will be given as a reward to the first miner who was able to mine the transaction or validate the transaction. So now the miners would be earning, in addition to this Bitcoin reward from the blockchain, he will also earn something called a mining fee. So as you can see here in blue, that is the income of each party. So this miners earn something called Bitcoin reward and a mining fee. So now for these two transactions, what would be the GST impact, my friends, on the miners who are earning this Bitcoin reward and mining fee? So now personally, if you ask me, this mining fee, yes, the miner does validate the transaction, but the miner will only know that he has earned this much of mining fee by validating the transaction which was sent from this address to that address, but he will not clearly know who is the person behind the address. That is one practical difficulty, because the address, that's the public address, would not help us to identify the person behind it in the ledger, right? So but however, the mining fee is a reward, that is a consideration that the miner has earned for the process or the service of validating that particular transaction. So who pays this mining fee, my friends? Mr. A. Let's say Mr. A wanted to send 10 bitcoins to B, and the mining fee is, let's say, 1 bitcoin. So then Mr. A would be asked for 11 bitcoins, 10 of which will go to Mr. B and 1 would go to the miner. So this is the mining fee. So here, yes, the recipient is Mr. A, we know it, but the miner might not be able to track the recipient like that when each transaction, because as I said, the wallet or the blockchain will only have the address, and identifying the person and issuing the invoice, those practical challenges are there. And of course, this is a service. This is definitely a service because he does a validation transaction for which he is earning in bitcoins. So maybe the open market value of the bitcoin, that one bitcoin he earns, can be looked at as the consideration for that mining service. But however, how will we comply with knowing whether Mr. A is in India or Mr. A is outside India? Is it CGST, SGST, or is it an IGST, or is it an export? There are practical challenges in determining the nature of the transaction, which is something we need clarity on. Similarly, the second income, that is the Bitcoin reward. Here, my friends, this is quite different from the mining fee, I would say, because here the Bitcoin reward was given automatically by the blockchain software itself. The Mr. A or Mr. B is not connected with this transaction, right? So the software itself, as an incentive to reward the miner, it has given an incentive. So here the question has again has some difficulties, like what is the nexus between that service and the income you earn? So chances are the miners can be said have not to perform any supply, and this is only an incentive, and this should not be taxed under GST, right? So this is one view for the Bitcoin rewards. However, another view can always be said that probably the software company is, have given this bitcoins as an income to the miner, and hence wherever the company is located, we need to pay tax. This is one other view that I came across, but I personally feel in an open system, at least like bitcoins, finding the company and raising tax based on that would be little difficult. And of course, the second thing is there is no contractual obligation that you should pay me this, it's bitcoins. It's only based on competition. If you are able to crack, you earn. So I personally feel Bitcoin rewards should be outside GST, but however, mining fee could be subject to GST. But the practical challenge would be in determining what nature of this mining fee would constitute. Now, second, let's look at Mr. B, who has been the seller of bitcoins. So now, what would be the income of Mr. B? It could either be a profit or loss. Maybe he would have purchased those 10 bitcoins for 100 rupees. When he's selling it for 9 or 12. So that is, he might either book a profit or he might either book a loss. So this again, of course, from an income tax perspective, he might have to disclose it as a capital gains or income from other sources based on his his pattern of investment. But however, from a GST perspective, as we discussed above, whether it is going to be goods or service would determine it. And of course, inherent difficulties in classification still exist, and what rate of tax to pay are still questions that are not yet answered. So from a GST perspective, this income that Mr. B earns would be subject to these questions that are yet to be answered. Now, coming to the third party, that is the crypto exchange in the ecosystem, guys. So what does crypto exchange earn? So in by facilitating this transaction, the crypto exchange earns something called a transaction fee. So now, on this transaction fee, is GST payable? Yes. So I would say out of all these parties in the ecosystem, the crypto exchange is the most easiest guy to identify or at least fasten a GST liability, because he is facilitating, he is not directly dealing with the cryptocurrency in itself. He is only facilitating the transaction to happen, and for which he is charging a fee called a transaction fee. So now This transaction fee, being a service or facilitation, would be subject to GST. And now, as we all know, these crypto exchanges are more like, apps or websites where you can go and transact. From a GST perspective, as we all know, there is something called e-commerce definition. What is e-commerce? Supply of goods or services over an electronic or digital network is called e-commerce. So now, of course, I'm not going into that. There is the debate of whether, if cryptocurrency is neither goods nor services, then crypto exchanges be looked at as an e-commerce operator. So since crypto exchanges are having a platform where people come and buy and sell goods or services, that platform is called a e-commerce operator. So on a platform where e-commerce happens, the owner of the platform is called an e-commerce operator. So the crypto exchanges can be e-commerce operators, but what we are transacting, if that is neither goods or services, then crypto exchanges uh, cannot be considered as an e-commerce operator in GST perspective, because the e-commerce is neither goods nor services. But however, let's go by the TCS ruling and consider cryptocurrency as goods for our discussion purposes, and hence such goods are being sold over the network. The crypto exchanges would be considered as a e-commerce operator. So now, as we have seen the ecosystem and the parties in the cryptocurrency model, now we will go and analyze the GST implications on the crypto exchanges, right? So as I said, recently DGJ found massive tax evasion after conducting searches at major cryptocurrency exchanges, including Wazirets, right? So other major players like CoinSwitch, Kuber, CoinDCH, BuyuCoin, and UnoCoin are also being investigated. Now, when we go and look into Waziret's terms of use on their website, right, it clearly says your relationship to Wazirets is that of an independent contractor, and neither party is an agent or partner of the other. So, which means Wazirets is providing the facilitation service on its own account, and he's not an intermediary or an agent of the person transacting on the exchange. And hence he is hence an independent contractor who is independently providing a facilitation service of honoring buy and sell transaction. This is not covered by any exception in the place of supply rule. It will be covered in the general place of supply provisions. So as per the general place of supply provisions, the location of recipient is the place of supply for the services. This is the general rule, right? So the services provided by Wazirets would also be having a place of supply as the location of recipient, and the service would be liable to 18% GST. And uh, another important thing that I would like to mention here is all the stock exchanges now, or the cryptocurrency exchanges now, they collect the KYC information, my friends. So hence, although on the face or on the Bitcoin blockchain ledger, things are anonymous, as I said, you can only view wallet address, etc. If the enforcement authorities wants to know who is behind these addresses, of course, the cryptocurrency exchanges do have control or do have visibility, at least to track down with reasonable efforts. The enforcements can still track down the with the KYC details who is the owner of the wallet, and this address belongs to, and things can be tracked. And reading that, it gives an impression that it is more traceable due to the KYC requirements, etc., than cash. Dealing in cryptocurrency becomes more traceable. Yeah. So now coming back for the GST on exchanges. Now it is to be noted that the services provided by such cryptocurrency exchanges are services other than Section 9 subsection 5 services. So what is Section 9 subsection 5 services, guys? 9 subsection 5 says when some services are supplied through an e-commerce operator, the liability to pay GST is on the e-commerce operator and not on the supplier supplying through the platform. Some examples are like housekeeping, accommodation, restaurant, transportation, etc. Simply said, Ola, Uber, Swiggy. So if you are supplying through such e-commerce operator, then the law says that e-commerce operator would be charging you GST and would be remitting the tax to the government. And for those services, it also says if you are a foreign e-commerce operator, right? E-commerce operator, since it's a digital uh, business, you can also be outside India and still be providing e-commerce services in India. Here what happens, you might not have any establishment or physical presence in India. So here section 9 subsection 5 says, the proviso clearly says, if you are a foreign e-commerce operator who has no fixed establishment in India, then for the purpose of complying with 9 subsection 5, you come to India, appoint a representative and pay GST, so that this provides a level playing field between the e-commerce operator. A domestic e-commerce operator, let's say, for example sake, let's assume Swiggy is an Indian e-commerce operator and he's charging GST due to 9(5) requirements. Hypothetically, assume Zomato is outside India, and if he is not charging GST because he is outside India, this would create a disparity. Hence, the law says if you are a foreign e-commerce operator giving 9 subsection 5 services, you also come to India, take a registration for this purpose and discharge GST. So now I buy through Swiggy or buy through Zomato. As a consumer, I don't have any difference in pricing. So there's a level competition field. But however, my friends, this kind of requirement is only there for those notified services under 9 subsection 5. As we all know, cryptocurrency exchange doesn't find place in these notified services, right? So this is a service other than 9 subsection 5 services. Similarly, there is no special provision like OADAR, right? OADR, as we all know, YouTube Premium you subscribe, Netflix you subscribe. They might not have an establishment in India, but still, even the outside India, they are expected to register in India and charge tax for all the B2C supplies or that are supplied in India. They have to register and discharge under OADAR, which comes under Section 14 of AGST Act. It's a special provision, especially for such online information, database and access and retrieval services, right? So that also does not cover an e-commerce operator, right? So here, I have tried to summarize what would happen should if since if it is a foreign e-commerce operator, if he is charging a transaction fee, then who is going to pay GST? As we saw, all the Indian e-commerce operators like Wazirets, if they charge a transaction fee, we are paying GST. So now Wazirets, let's say if 100 is the transaction fee, 18 is the GST, we pay 118. But if I'm using say Coinbase, who is outside India, and he's charging 100, then that is more cheaper to me than transacting in Wazirets. So now, should I pay GST under RCM? Now for this, we should understand as an import of service. So here, this is a matrix of import of service, my friends. That is import of service under section 7 of CGST Act. That is supply clearly says import of service for whether or not for business purpose is a supply under GST. So whether you import a service for business purpose or other than business purpose, it is a supply under GST. Now what will happen if it is imported by a B2B recipient, then he is liable to RCM, whether for business purpose or for non-business purpose, he is liable to RCM. If it is for non-business purpose, of course, he can't take ITC. That is the only difference. Now the concept or the challenge comes for a B2C recipient. So if a B2C recipient is importing it for business purposes, then it is RCM, my friends. However, if it is for other than business purposes, then it can be divided into two. That is only for OADAR services, a non-taxable online recipient, NTOR. The law clearly says a non-taxable online recipient is someone who is not registered and receiving services for other than for business purposes. Only in those cases, that is, you subscribe to Netflix, right? You don't subscribe Netflix for business purposes. You do it for other than business purposes. So only for those cases, the law clearly says the non-resident has to come and register and pay tax in India. So now what will happen for services other than OIDAR? Is it an import of service? So now let's say you are taking some personal counseling or any such service from a foreign supplier, why are you not paying GST? Or you're downloading some antivirus software, you're paying some money and downloading, right? Assuming that's not ODR, you need not pay GST because imports for other than business purpose, that is for personal purposes, are exempted by notification 10/17. So this is a matrix. So now if you look at a foreign e-commerce operator who's charging transaction fee, if he is charging the transaction fee to a B2B recipient, then he will pay GST under RCM, right? The person who is trading on the crypto exchange, if he's already GST registered, he will pay RCM under those transaction fee. If he's a B2C recipient and if he's doing it for business purpose, then he will pay RCM. But the challenge is, if you're investing, if you're just doing it as a hobby, not for business purposes, right? So most of the crypto traders don't do it for business purpose. In those cases, there is no liability, there is no GST mechanism to collect tax, because this is not an ODR service, it's an e-commerce service. And if, since you're doing it for other than business purpose, it's exempt wide notification. No, this is where Vazirets will be charging GST, but foreign e-commerce operator might not charge GST, right? So, can we say the foreign e-commerce operator is providing ODR services and hence he should register in India and pay tax in India? So here it has to be understood, ODR service is different from e-commerce service. So in the case of PVR Limited, New Delhi Sistat has clearly said, any person who visits the website of the appellant to seek information about the show timings or like information does not have to make any payment, right? So if you go and see these what are the movies listed, when the show timings, etc., you don't make any payment to see such information, right? Only when you book the ticket, something called a convenience fee is charged. So this convenience fee is charged because the substance of the transaction is to do an e-commerce, right? And this is not OADAR because no access is no charge is made for giving access to any information. So similarly, for a cryptocurrency exchange, uh, for you to see what are the price of various coins on the exchange, there is no transaction. Only when you effect a transaction, they charge something called a transaction fee. So this is an e-commerce and this is not an OADR service supply. So there were some news articles which said foreign e-commerce operators can be looked at as providing OADR service, and with the OADR mechanism we can make them register in India and pay tax. I believe that is a little far-fetched. OADR services does not cover these because they are e-commerce operators and not OADR service providers. So therefore, there would not be a level playing field between Indian e-commerce operators and foreign e-commerce operators due to the absence of adequate machineries to make the foreign e-commerce operator register in India for services other than the notified services under 9 subsection 5. So this might make the Indian crypto exchange less competitive, although the place of supply, right, is in India, because the location of recipient is the place of supply. So all the traders are located in India but transacting through a foreign e-commerce operator. Even though the place of supply is in India, our GST law currently does not have the mechanism to make foreign e-commerce operator liable for GST in India unless they have some physical presence in India. Maybe if the foreign e-commerce operator has some office or has his main server in India, unless and until that is there, he has no necessity to register in India and pay tax under forward charge. So, so this with this I summarize my discussions or understandings on the cryptocurrency and what are the key deliberations. So I hope this would have added some value on understanding how who are the participants in the cryptocurrency and what are the GST ambiguities that are there and what we can possibly expect from our government. So hope this would have added value. Please keep following Weekly Indirect Ads for more videos, and probably let's see if I can make some more videos on NFTs and other tech areas. So if you like the video and you found it informative, please share the video with your friends, like, share and subscribe, and let's see in the next video. Thank you, my friends.